Welcome. Today we're diving into the scope of business income under Section 4A of the Malaysian Income Tax Act 1967. This section is crucial for anyone involved in business activities in Malaysia, whether you're an individual, a partnership, or a company. We'll explore what counts as business income, the legal definitions, and how tax authorities determine if your earnings fall under this category. By the end, you'll have a clear understanding of what's taxable as business income and what is. Let's start by looking at the legal foundation of Section 4A and why it matters for taxpayers. Section 4A of the Income Tax Act 1967 states that gains or profits from a business, regardless of how long the business operates, are subject to income tax. This means that any income derived from business activities in Malaysia is taxable. The law applies to individuals, partnerships, and companies alike. Understanding this legal reference is the first step in recognizing your tax obligation. It sets the stage for what follows, ensuring that all business-related income is properly reported and taxed under Malaysian law. Term business in Section 2 of the Act is defined broadly. It includes professions, vocations, and trades, as well as any adventure or concern in the nature of trade. However, it specifically excludes employment. This wide definition means that even activities that aren't traditional businesses, like a one-time property flip or freelance consulting, can be considered business if they're profit-driven. This broad scope ensures that various income-generating activities are captured under the tax net. Scope of business income refers to the range of activities and transactions that are considered taxable under Section 4A. This includes both regular trading or professional operations and occasional ventures carried out with a profit motive. Whether you're running a retail shop, offering consulting services, or engaging in a one-off property sale, if your intention is to make a profit, your income likely falls within this scope. Understanding this helps you identify which of your earnings are subject to business income tax. Section 4A covers a variety of business activities. These include trades such as buying and selling goods for profit, professions like law, medicine, or accounting, vocations which are skill-based occupations like artists or consultants, and adventures in the nature of trade such as a one-time property flip. No matter the form, if the activity is carried out with the intention to earn a profit, it's likely to be considered business income under this section. How do tax authorities decide if your activity is a business? There are several tests. The profit motive test checks if your main intention is to earn a profit. The repetition or continuity test looks at whether the activity is ongoing. The commerciality test examines if the activity is organized like a business. Even a single transaction can be considered business if it's profit-driven. These tests help determine if your income falls within the scope of Section 4A. Profit motive test is straightforward. Was your main intention to make a profit? For example, if you buy goods specifically to resell them at a higher price, this shows a clear profit motive. This test is often the first step in determining whether an activity is considered a business for tax purposes. If your actions are guided by the desire to earn, your income is likely taxable under Section 4. Another important test is repetition or continuity. If you regularly engage in an activity, like selling handmade crafts online or providing consulting services, this ongoing nature suggests it's a business. Tax authorities look for patterns and regularity in your operations. Even if the activity isn't your main job, frequent transactions can bring your income under Section 4. Commerciality test looks at how organized your activity is. Are you maintaining accounts, advertising, or employing staff? These are signs that your activity is run like a business. The more structured and systematic your operations, the more likely your income will be classified as business income. This test helps distinguish casual activities from genuine business undertakings. Even a single, isolated transaction can be considered business if it's profit-driven. This is called an adventure in the nature of trade. For instance, buying land, developing it, and selling it for a gain, even if done only once, can be taxed as business income. The key is the intention to make a profit, not the frequency of the activity. Scale and organization test examines whether your activity involves systematic operations. For example, a property developer managing multiple projects demonstrates a high level of organization and scale. This test helps identify larger, more complex business activities that clearly fall within the scope of Section 4A. The more organized and extensive your operations, the more likely your income is taxable as business income. Business income in Malaysia is taxed based on several principles. Only income derived from Malaysian sources is taxable. The basis period is the accounting year ending in the year of assessment. Income is recognized on an accrual basis, meaning it's taxed when earned, not when received. Importantly, even short-term or one-off ventures can be taxed under Section 4A if they're profit-driven. Let's look at some examples. Trading income includes profits from selling goods. Manufacturing income comes from producing and selling products. Service businesses like consulting or logistics also fall under Section 4A. Professional income includes fees earned by doctors, lawyers, or accountants. Even property development, agricultural business, and construction profits are covered. One-time trading ventures like buying and selling shares for quick profit are also included. Scope of business income also includes related or ancillary income. This can be service charges, commissions, brokerage fees, management fees, or consultation fees. Income from letting business premises or equipment, if related to your business, is also included. Even exchange gains and recoveries of previously deducted expenses like bad debts are taxable if they're part of normal business transaction. Not all income is taxed under Section 4A. Employment income is taxed under Section 4B. Dividends, interest, rents, and royalties fall under Section 4C. Vocation or professional income outside a business structure is taxed under Section 4E, while miscellaneous irregular income is under Section 4F. It's important to classify your income correctly to ensure proper tax treatment. Consider this example. A person buys 10 plots of land, develops them into houses, and sells them for profit. Even though this is a one-time activity, it's considered an adventure in the nature of trade. The intention to make a profit makes it taxable under Section 4A. This shows how even isolated transactions can fall within the business income scope if they're profit-driven. Here's another example. A doctor operating a private clinic earns consultation fees. This is continuous professional income and is clearly business income under Section 4A. The regular, organized nature of the activity and the profit motive make it taxable as business income. This example highlights how professional services are included within the business income scope. Now consider a salaried teacher who occasionally gives tuition at home. This side income doesn't form a regular business and may fall under Section 4E or 4F, not Section 4A. The lack of continuity and organization means it's not classified as business income. This example shows the importance of regularity and structure in determining tax treatment. There are several key principles that define the scope of business income. Section 4A is interpreted broadly, covering all activities with elements of trade, profession, or profit-seeking intention. The taxpayer's intention and the way the activity is carried out are crucial. Only Malaysian-sourced profits are taxable, and the form of the transaction doesn't matter if it's essentially a profit-making trade. Several court cases help illustrate the scope of business income. In CIR v. Fraser, 1942, the court held that one-off transactions can be considered adventures in the nature of trade. In American Leaf Blending Co. SDN BHD v. DGIR, 1979, systematic use of assets was deemed business income. The Lower Perak Cooperative Housing Society Limited v. DGIR, 1994 case emphasized the nature and frequency of activities in determining business income. Summary: the scope of business income under Section 4A is very broad. It covers all activities carried out with a profit motive, whether regular or occasional. This includes trades, professions, vocations, and adventures in the nature of trade. The law ensures that all commercial profits derived from Malaysia are fairly taxed, forming a key part of the country's income tax framework. Understanding these principles helps you comply with tax laws and avoid surprises during assessment.